This is Andrew Stotz of Stotz Investment Research, looking at India, a country that has an expensive valuation, which drags down its FVMR attractiveness. Let's take a look at the country. I look at it from four different angles. The first is GDP. What we can see is the GDP is the fastest in Asia at 6.68%, beating the Philippines by just a whisker. Now, the drivers are mainly private consumption, but government consumption has contributed some as well. Net exports were a drag on the GDP of the country, but net exports are not a major part of GDP of the country. Now, let's look at the market for a bit, and the yellow line shows you India's performance, and it's pretty impressive, showing a very strong outperformance. What we can see is the population is about 1.3 billion people. GDP is about $2.3 trillion, and per capita GDP is just under 2,000 US dollars. The market cap is about 2 billion, so market size relative to GDP is about 90%. The market volume's nearly 4 billion US dollars per day. There's about 3,922 companies listed on the exchange in India, on the exchanges, but unfortunately only about 300 to 400 are really large and liquid. Now, it's the most expensive in Asia on a price to book and a dividend yield basis. But India had the second highest ROE in the past 12 months after Indonesia. So in some ways, you're getting what you pay for. Now, from an attractiveness, let's look at our four elements. The overall attractiveness of the market is a 4 on a scale of 10, so not that attractive. Fundamentals are the main attractive part, and that's at a 9. Valuation, unattractive. Momentum, definitely above average, and risk is slightly below average. So let's look at that in more detail. We said that it's overall moderately attractive. Great ROE, it's the second highest in Asia. That's part of what's driving the fundamentals. Valuation, well, it's the most expensive on price to book in Asia, and it's the second highest on PE. Momentum, well, moderate earnings momentum, fairly good price momentum. And risk, it's a relatively high beta to Asia ex-Japan index these days. Now let's look at the market performance of the sectors. And what we can see here is that first, before we look at the chart, let's remember that financials account for 22% of the market, materials 13%, and consumer discretionary 13%. Now, the best performing sector in stock, well, energy sector was up about 10%, and oil India was up about 35%. The worst sector was healthcare, down about 4%. Ajanta Pharma is down 27%. Now, get access to our research and articles by joining our free newsletter at becomeabetterinvestor.net/join, and I'll see you there.